What is happening, Mad Gang? In today's video, I want to explain to you how I made $110,000 trading gold. And most importantly, explain to you my thought process going into the trade, my emotional management after the trade so you guys can learn from it. So definitely take some notes. And yeah, man, let's flip that damn switch, baby. But before we do that, before we jump into the charts, you guys know I got to talk some emotional management, and I don't think a lot of people talk about this, but leading up until this trade, I had a lot of conflicting thoughts, I had a lot of emotional preparation, I can say, leading up to the trade and after the trade. And yeah, man, I think we need to address this. So leading up to the trade, I had a trade that looked similar. I waited for this particular trade, this particular setup, this pattern. As most of you know, I trade one simple pattern that really just happens almost every week, sometimes even twice a week, sometimes even 3 times a week. But yeah, I waited for this pattern. It happened 2 weeks ago. The trade happened on the 15th of July, and the trade that I was waiting for happened 2 weeks prior to that. I did not catch it, but I want to explain that I learned from it. So, I mean, in the trading industry, you need to get as much information as you possibly can and always learn from it. If you don't take a trade, that's okay. Just go to your journal and learn as much as you can. So with that being said, I don't want you guys to think that I just woke up one morning and decided I'm going to make $100,000 on a trade. It doesn't work like that, okay? Even though I wish it could. I've been trading for 10 years. I've been helping a lot of people succeed in the market. There's some people who made more than I did from this trade. So I'm not trying to make myself look like the GOAT or the best here. I'm just trying to be real with you. I did close this trade prematurely, so I am a little bit angry at myself. Definitely learned a lot. Yes, I made a shit ton of money on this trade, but I could have made more. These are all thoughts that goes into my head, goes through my mind, thinking about this. And maybe I'm too hard on myself. I don't know. I'm super grateful, don't get me wrong. But I did bend the rules a little bit with my exit. I mean, I exited a lot prematurely. I guess it's just part of the game, I did journal it down. I did learn from it. So when the trade happens again, I'm definitely going to react differently. And I'm just going to continue building my overall thesis on how I can improve as a trader. But without further ado, man, let's get into the charts and let me explain to you what I was looking for. So on the daily time frame, I want to start on the daily time frame because it's always just clears up so many things for me and it's just a lot more simple. I saw that we are testing this range right over here. Now I'm not drawing my levels on the daily time frame. I was just looking that we're at some sort of a resistance, and that created my overall thought process to potentially go short. What I want to focus on is the high and the low of the previous week. So the low was here at 3282. And then the high was here at 3368. That's important to understand, okay? Going down to the H4, I can see we're in some sort of uptrend. So any logical person would think that going short here is pretty much insane, am I right? But not if you understand the 3 patterns that I look for. I look for a FBR, false break reversal, red setup there, green setup there. And in this particular trade, I saw a false break reversal happening, and I was actually waiting for it to happen later on during the week. This is just me being real with you. But I saw it happen on the Monday, so, I mean, who am I to complain, right? Going down to the M15, I wanted to spot the previous day high and the previous day low, as that was important because it created a lot of context for me. So with that being said, I drew my low right over here from the previous day on the Friday Asia session, and then the high at the NY session. Following into the Monday, I saw that the Asia session opened up and broke above yesterday's high. Yesterday's high is also coincidentally the high of the previous week. So with that happening, I saw the break above and then coming back down, creating the low of Asia session, which I marked out with horizontal level. So that's very important. Now I got my high and my low of the previous week, got my high and low of previous day, and I got my high and low of the Asia session. So that's important. Now my parameters are set. Now I just wait for price action to follow and I react off from it. And I hope you guys can see that I'm really not here to try and predict any market movement. I'm not here to let my ego get in the way. I'm simply following my plan, following my thesis that I set out for myself, and then I'm just reacting off from it. That's super important to understand. So going into London session, I saw that London session open up high with a massive bullish engulfing candle. But what I need you to focus on, let's just zoom in a little bit here, is a bullish engulfing candle had no wick to the top side. That's a very important characteristic of this candle, because the candle after that just gave us a push back down, 2 indecision candles, or well, a lot of rejection candles with another bearish engulfing. Now forget about that, because that doesn't really mean anything, it's just context. But when you go to the 30-minute, you also notice that it doesn't really mean anything as well, right? We got a bullish candle with a bearish candle with a wick pointing to the top side. Doesn't really mean anything. But what I want you to focus on is H1. Remember what I always say, I look at the H1, 15-minute, H2, 30-minute. Always, that doesn't change. So when I was a little bit skeptical about the 15-minute movement, I just simply moved up to the H1 to see how the market is forming there. And that gave me my point number 1 that I want to focus on. Remember, I already got my high, already got my low. So now I already got my outside of the house. I got my roof, got my floor, the walls are up, the windows are in. Now I need to look. I know it might sound dumb, but hey, we got to make trading fun. So now I got to look what's going on inside of the house. So now that we're looking at the finer details, I want to look at this high right over here. Let's just remove this for a second. Don't worry, it's coming back right up. But I see that we've got a rejection candle on the H1, and this is where candlestick maturity plays a big role. I can see the first 15 minutes of the hourly candle pushing the market back up, with the candle after that coming back down and closing inside of the range. I'm not convinced yet. But after that, the candles following that movement closed back inside. That was indecision candles. We did not break a low and close below. We did not break a high and close below high. So for all purposes of this analysis, we were stuck inside of this range right here. That's why the candle was formed with rejection and coming back down. But then following that, we saw the market rejecting that level and then with one big fat bearish engulfing. Remember, this is just context. I'm not just bluntly jumping into the market because I see this. No. I'm just seeing this, and it's creating context. So I guess you can call this a double top. I don't know what you want to call it, but we had the market testing it, coming down, and then testing it again. The market then gave us a bearish engulfing, pushing back down. This is all just blah blah actually in the market. I want you guys to focus on the overall day movement. I don't want you guys to get stuck. The worst thing that I want to do is I want to get stuck on the intraday movement. It's fine to trade intraday in smaller time frames as long as it aligns with a higher time frame bias. That's very, very important. So first thing that we see is we see an open and then we see a close. What's very important to notice here is we got open, close, open, close. Can you guys see what I'm referring to here? We have a bullish day, another bullish day, and then we have the first bearish day. I'm looking at the open and the close. So this closed lower than the open. This one closed higher than the open and closed higher than the open. Then I also saw a false break reversal, right? On the 15-minute time frame, the market closed above the last week's high, and then it closed back inside of the range. That is my false break reversal day 1. Okay. Then what needs to follow the following days? We need to test a high for a reference point, test then our baseline with confluences, and then it needs to break down lower. So this needs to be our false break reversal day 2. So what did I look at? I saw that in Asia session opened up. We did not break the low yet, but also we did not break the high of the previous day. So it's Tuesday, the market pushed back up in Asia session. No comments really on the Asia session. We were just moving up, but we were slowly moving up, right? This is just like basically crawling up. There's no real volume here. The real giveaway came in London session. So during London session, we created our high Asia session, and I want you guys to really place focus on the test here. We tested Asia session high with the engulfing candle coming back down. That was the first dead giveaway that we're going to push back down. Okay, we got the candle right here, but it did not give us our entry criteria. The real place where we got our entry criteria is with this bearish engulfing right here. So we got the test of the high. Let's hop down to a 5 minutes so you can see how it was formed. another engulfing candle. Now I want you to pay attention to the previous pattern that we saw, the break above the Asia session. This is exactly the same. Let me zoom in. Little to no wick to the top, but we came back up and then the market came back down. This is unfinished business. We basically touched that high, call it a liquidity sweep, call it whatever you want. I mean, it's a horizontal level that I reacted off from. And I reacted off from it because I saw that there were aggressive sellers stepping in. So call it what you want. If you're in the trading industry for how long, I mean, I can't compete with all the new concepts nowadays. I made money off from this move. It was a basic move that I see every now and then. I backtested this. I know this move works. So it's not me creating new concepts. I don't know with all of the concepts these days, man. I'm just sticking to what I know works. At the end of the day, if you guys make money, you guys are making money. So I saw this bearish engulfing forming. I mean, you can draw a counter trend line here. That's not really what I did. But whatever you can do to track pressure, that's not the focus point here. My first entry was marked out at this horizontal level at 3364. Why? Because I saw a break of structure with this candle right here, jumped in impulsively. Right over here. Stop loss at the top. And then I exited prematurely right over here. Second entry, I stacked my position. Why did I stack there? I'm going to explain right now. Let me just draw my entries. And in the third position was, yeah, it was an impulsive entry, but I did follow my rules, okay? This was a pretty bad one, but I exited this one before I thought it would result in a loss. This is what I learned I learned the most from this third trade. And I mean, it's not perfect. You can judge me if you want. My thought process was that it was going to go further, but it didn't happen. That's trading, man. You will never know exactly what happens. Regardless, I made money off from this move. Let's go to the price action on the 15-minute time frame so you guys can see my entry. Let me go to the actual trading platform. Then in the top left, you can see it's a live account. I mean, the time for convincing is done. Like I said, it's not necessary for any more debates. You guys can believe what you want to believe, but I want to focus on these three trades. So you can see the first trade was with a 50 lot, the second trade was a 25, and the other one was a 25. Now, the reason for that being is one, I was afraid, to be honest, to enter a massive lot at that time. So then I decided, let's spice it up into three different trades. Second is I didn't want too much of a slippage happen because if you enter large positions, you need to find a counterparty risk and then slippage might occur. That's just part of the game. But I added onto my position as I had more confirmations. Back to the trade. Let me just remove these. Remove, and then remove. Okay, so the first entry I got because we closed with a bearish engulfing on the 15-minute and on the 5-minute. That's a pretty simple entry. The second entry I got was because I impulsively entered off from the break of this exhaustion area, and then with the retrace back up into that exhaustion area, I stacked onto my position. And then the third one was because I saw volume kicking in due to fundamentals. So we also closed below this exhaustion area over here, which is London session low, and then I entered somewhere around here at the close of this bearish candle right over here. Now, why did I close? I only closed because I saw this volume candle kicking back up, and then I saw a lot of rejection over here. I saw the market not breaking this low. Let's go to the 5-minute time frame. Okay, so on the 5-minute time frame, I saw a lot of rejection, and I was like, at this point of the trade, I was like, okay, yeah, I'm in decent amount of profit right now. So mentally, it was playing games with me. I'm gonna be real with you all. I would love to say, yeah, I was owning this shit and stuff, but it didn't happen, man. I learned a lot from this trade. Thinking back right now, I mean, hindsight is perfect sight. So I would do you guys an injustice if I was sitting here saying, yeah, I would have kept it longer, man. Yeah, I would have entered bigger. No, I'm being real with you and sharing my experience based on what I can remember in that time. But when I'm trading, man, there's so many things going on, so many emotions. I'm sweating, sometimes I'm praying, sometimes, yeah, man, it is what it is. It's the game of trading. I absolutely love it, but I need to be real with you all because I know you guys are experiencing it too. So the exit came at this point round about here because I saw a lot of rejection and I got afraid. But regardless, man, we had a big retracement after we broke below this exhaustion area. We closed below and then we broke back above inside of that range. I mean, it's always sounds cool to say, yeah, I would have held. But I mean, I'm pretty happy with this move right here, this move from here to here. I mean, it's more than enough for me. So all in all, it was 56, 40, and then 14.3. So that counts up until around about 110,000. And then before that, also had some Euro USD trades. But yeah, man, I'm really starting to love Euro USD, combining that with gold if I don't see a trade on gold, and also GBP USD. Been trading it for some time now. I'm having massive success with those three pairs, and it goes a lot hand-in-hand correlation with the DXY and then my composite index, which is the pair that I built over here. Let me just show you. Don't want to get out of context, but this is basically just my confirmation pair based on gold, which I also saw a trade off from. And then, yeah, man, at the end of the day, I really need you guys to pay attention to your past trades. And a lot of people say you need to journal, you need to write down what you see in the market. And I tend to agree and tend to disagree to some point, because you need to remember, whatever you do, you need to understand why you're doing it. So the reason why I'm journaling it is because I'm preparing for the next trade. If you're just journaling because somebody tells you to do that, it's pointless, bro. It doesn't make any sense. And there's a lot of reasoning going on behind that trade, because I saw aggressive buyers kicking in at the exhaustion area, but tapping the highs of London session and Asia session was really the dead giveaway for me, because then it means there was unfinished business. Aggressive buyers got trapped over there, and then the aggressive sellers, when they had enough liquidity, they kicked the market back down. And that was pretty much just a dead giveaway for me, with a bearish engulfing, a break of structure on the lower time frame, with a false break reversal day 2. Such an easy pattern, man. So yeah, man, that's basically it. I hope you guys learned from it. I hope you guys flipped the damn switch, man. And super proud of you guys. Thank you so much for watching this video. I'll see you guys in the next one.